Nvidia has done it again. The numbers are beyond belief. We're going to run you through here the results, the numbers you need to know. This is the most important earnings event in the history of stocks. All the key milestones, comparison against their competitors, where the stock price is going, and how can you make money. Of course, this is the most important thing here. So stick around till the end. What it means for the market overall, to celebrate our 55,000 subscribers and our mission to get 1 million people to financial freedom. We are giving away our financial freedom program for 99% off. Today is the last day. So if you want to get our core program for only 1%, go to felixfriends.org/stocks, and the price you see there is not what you're paying. You're only paying 1% of that. So check it out today. felixfriends.org/stocks. Now, let's move into the key stuff here. This is a really nice visual where you can see what the business actually does. I love these. So data center demand and revenue, 10.3 billion, 141% growth quarter on quarter, 141%. Insane. Together with gaming growing at 11%, and that's back. Visualization, tiny but growing. Automotive is falling. That's the only negative in here in OEMs, but they are tiny businesses. No one really cares. Revenue is 88% up quarter on quarter. That's insane. They guided us. They told us they were going to hit 11 billion. They hit 13.5. So we know they sandbagged expectations, and bear that in mind for the next guidance, which I'm also going to give you in a moment. Gross profit now has a 70% margin. If you don't know how exciting that is, I'll show you in a second. Compare it against AMD and Intel and Texas Instruments and all the competitors out there. The net profit margin is now 46%. That is, again, pretty insane for a manufacturer. And that's before all that software revenue is really coming in. Again, we'll talk about this here, but this is the overview. And just to break down the details here. So I want to run you through a few numbers. Don't be scared of numbers. Earnings results are all about numbers. And at the end of the day, whether or not you make money with your stock is about understanding these. So I'm going to walk you through this. So the key number here, revenue, 13 billion. That is against, as I said, 11 billion guidance. So that is insane. The quarter-on-quarter growth, 88% quarter-on-quarter, 101% year-on-year. They doubled their business in 12 months. That's just, in terms of sales, crazy. And they're not doing it by giving stuff away or running massive promotions or discounts. No, none of that. They're making 26% more profit per item sold. Now a gross margin here of 70%. Insane. Their operating income, 6.8 billion. You know what that means? They actually now have a 50% EBIT margin. That's profit. That's on a GAAP basis. So none of that adjusted nonsense that, Charlie Munger would hate. So just insane numbers. Let's look at a couple more here. The non-GAAP EBIT margin is basically operating income here, non-GAAP. That's also 58% now. That's a 58% EBIT margin. That's for chip manufacturers. You don't know how good that is. It's just insane. And of course, the real growth comes from computing here. Graphics is a tiny part of the business now, and that was the original business. Isn't that insane? Like, amazing stuff. And the data center business is up 171% year on year. 171. That's crazy. Really crazy stuff. In the second quarter of 2023, it was 3.8 billion. Now it's 10 billion a quarter. So you can see why the stock price has moved the way it has. What we look at in a moment, is it justified and so on. Now, moving on to another slightly prettier illustration. I just wanted to put into perspective here what the revenue looks like. So the green part here at the bottom is data center. And that's, you listen to the man, Nvidia is driven just by data centers, cloud computing operators, changing from CPUs to GPUs because the AI demand is insatiable. Everyone's creating AI content and so on, and they just need to up the speed of those servers. That is crazy. Gaming actually also growing a little bit. They're saying they're pretty bullish on laptop demand, particularly. My laptop is running on a GeForce RTX, which is not the fastest thing in the world, but it does a decent job. So we have to use it because we want to use the tools, right? So, I use Nvidia Broadcast. For that, I need an Nvidia chip. It's just crazy. Okay. If you watched my pre-earnings Nvidia video, I put out this chart in, and this chart shows in the background these colorful little bars there. That's profit, okay, like net real profit. And then the white line was the stock chart, right? So where did we come in with profits? Well, let me show you. I'm going to have to zoom out a little bit because we're actually at a bar that's at 6 billion. So this was 3 billion here, 3. So 6 billion would be up here. I know, it's silly, isn't it? And so the bar for this quarter of profit is, see if I can get a straight line, is this one here. That's how much this business has improved since the last quarter, which was the biggest beat in revenue and profits in the human history of companies. That's what this chart looks like. So you can see why the stock's going through the roof, right? Trading at $500 as I'm recording this. We'll look at that in just a second. Isn't that crazy? I mean, that's just crazy. Staggering stuff. Okay, so let's look at some comparisons here. People are always like, well, how's it doing against competitors and so on. Okay, let me walk you through a few numbers here. These are from this benchmark here. These are the numbers from the last quarter because these services don't update the data that quickly. So we'll do it together. And that's actually always a really good exercise and encourage you to do as well. For the stocks you own, track these kind of things. Gross profit margin, one of the most important things to track. It basically tells you how strong is the moat. How hard is it for someone who's an Nvidia customer to go somewhere else? If it's really, really hard, they're going to pay a huge premium for Nvidia products, and therefore Nvidia will have a massive, massive gross profit margin. So the gross profit margin is now, where was it? I had it here somewhere. It was at the top, wasn't it? Was that 70%? I think it was 70%. Yeah, 70%. So let's go back down and update our little chart here. So we've gone in one quarter from 56% gross profit margin to 70. Anyone do better than that? No. Texas Instruments has always been the gold standard in chips in terms of margin, a very, very profitable business, but they're missing out on the AI game. But it's beating that. Crazy stuff. If we look at net income, which is really just, profit. The net income margin has jumped from 18% to now 50%. And Texas Instrument at 40, with sort of an old product. That's crazy. That's crazy. Look at the other guys. Look at Qualcomm has 22%. AMD is just breaking even. Intel is losing money, right? Okay, they're investing and all of that, but still, crazy stuff. And that's why the PE ratio is this insane number. But we're forecasting in 2 years to go down to 31, which will be kind of like with an industry. Now, with this growth step that would actually happen either faster or it would go down probably to about a 10 to 20x PE. So just crazy. And yeah, long-term earnings growth is just going to be added as well. This 35% figure is going to go to the moon. It's going to go to 80% or 90% or 100% or something. Whereas Texas Instrument down there at 4.5%, was the best numbers we've had in this space. So just crazy. I hope that puts it a little bit into perspective for you. Now, let me walk you through the key milestones. These are the things I think one should take away from this. Guidance. That's what the market cares most about. We expected them to beat numbers, but what are they going to do next quarter? They guided 29% above what we were expecting for the next quarter. That's a lot. That's almost a third higher than we were expecting. That's huge. You normally guide 2% higher, 5% higher, and the market's happy. 29%, amazing. And essentially, it says to us, look, there is no supply chain problem. The revenue is for the first time larger than Intel's. the first time since this company's established since 2000 that they managed to get higher revenue than Intel. And that says something to me about the shift here from Intel, typically a CPU manufacturer. I know they are, building GPUs and so on as well, but it's really a shift. The gross margin upside is as I say, it's 112 basis points above expectations. It's insane. And here on, the CFO said, we expect supply to increase each quarter through next year. So they got no issues there. And this is a bombshell. 25 billion in stock repurchases. Who would have thought, when your stock is apparently trading at a moon level, insane valuations bubble, the company goes and spends $25 billion to buy it back because they think it's actually going to go higher, and they're generating so much cash that even with all of their investments and all of their expansion, all of their daily product launches, they've got 25 billion lying around, and they're going, we're going to buy our own stock. So it's really something. Now, I put in here, Biden's a paper tiger. This is about the export restrictions. They're saying we do not anticipate additional export restrictions on our data center GPUs, if adopted by the US, would have an immediate material impact to our financial results. However, over the long term, restrictions prohibiting the sale of our data center GPUs to China, if implemented, will result in a permanent loss of opportunity for the US industry to compete and lead in one of the world's largest markets. And that's what happens. Sanctions never work. Give me one example in history where sanctions have actually worked. They've never worked anywhere, ever in the world. It's just something you do if you're a paper tiger politician and you want to do something that's popular, it gets you a good headline, but it achieves bugger all. Absolutely nothing at all. The only thing it will achieve is that US businesses won't be the ones supplying China, and China is just doing it all themselves because they have to. You've just given them the encouragement, and we just read that story, right? Huawei apparently getting $30 billion from the government to just build out the most massive GPU AI chip manufacturing across the country. So yeah, it's a shot. It's a shot in our own feet essentially here. All right, let's look at the chart. We look at the options market where the resistance sits, and of course then how to make money. So stick around and let me find the chart. I'm on a laptop here today, so everything's a little bit smaller. I hope you can see this. Nvidia, this is the chart. Now, this chart does not show you that we're actually trading slightly above the $500 line. Why does that matter? Because this $500 line was our resistance from the options market. The way that works is when you buy a call option, there is a market maker on the other side who's selling the call option. The market maker is therefore essentially short the stock. He has a risk. He doesn't like risk. He only takes a margin, a commission. So he therefore goes and he buys Nvidia shares, hard shares. So he now has Nvidia shares on one hand, and he has a short call option, which means he's short. So he's at zero, no exposure to the stock. So when you go to $500 and your call option is making you money, you're going to sell your call option. What's the market maker going to do? Well, he's going to sell his shares. So it depresses the stock. So you get this downward pressure when you hit these key lines here from the options market. And that's what we would expect to see. And that's why 500 was like the holy grail to punch through, right? So let's look at the options market because it tells us so much about where the market is positioned, where institutional traders are positioned, and it gives us the support and resistance. So go into your brokerage, Thinkorswim, Webull, to Active Brokers, whatever your drug supplier of choice. Click on the options chain, and then let's just look at this week here. So there are different expirations. We just look at this week first. And the left side are calls. That's what we care about because we're looking at going up. In the middle is the share price. And you want to look for the column that says open int, or sometimes OI. And that's basically telling you where the market's positioned. And then you look for the biggest number. The biggest number is 21,000. Now that is the equivalent of 2.1 million Nvidia shares. It's significant. And that's at $500. So what is that telling you? That when we get to $500, there is a massive resistance. We look at the monthly expiration, which is September 15th. I'm in a different time zone. It shows September 16th. Again, we want to look at $500, look at 32,000. Again, these are making money now. So what you want to watch out for is two things. How many of these are getting closed, and are they moving higher? And you can see here already at 525, they're already 18,000. So you want to watch that number. Is that going up, which means the market believes that the stock is going to go higher? If these call options stay at $500, then it's saying to you the market doesn't believe. The market thinks this is a blip, and therefore there is going to be pressure on the stock. coming down. So really, really important to watch out for this information, and it's completely free. You just need to understand a little bit about the options market. So we've got that checked out. Now, how do we make money out of this? How do we actually trade this? Right. So go to a website called optionswatch.io, optionswatch.io. We built it. We are continuing to build it. I'm doing it with one of my mentees. He's an ex-Twitter guy, super smart guy. And we basically want to make trading, options trading easier for you. Right. So we've got our watch list here. And all you got to do is type in Nvidia, or you can even see it here. You can see Nvidia already here. And the first thing you see is this column, IV%. That tells you how volatile is the stock. And 87 out of 100 is very volatile. It also tells you that options are going to be really expensive. So for the love of God, stop buying call options, okay? You're overpaying massively. You're using the wrong strategy because you don't fully understand how options work. And I don't want to tell you off, but you need to learn if that's what you're doing. So don't do that. You're just gambling without an edge. You want to be investing with an edge, right? That's the difference between retail and institutional traders. And I used to be an investment banker, in case you didn't realize. So what can we do? Okay, so this chart shows you where the stock was closing yesterday at 471. So we're actually trading $30 higher. Now, it doesn't show you that yet until the market opens, but we can still walk through a trade here. So say you want to go for the 15th of September, let's just say as an example, because that's the biggest expiration. That's typically the way we want to trade. It's a little bit short, but it's a reasonable setup. Or you could even go into next week, but that will be, again, higher risk. Okay, so let's go to 15th of September here. So what do we do? Well, let's just say how low can we go below the current share price? And the right side here shows you your profit. Green's good, red's bad, right? So it shows you your profit. And it also shows you your probability of making money here. And you see that 66%. So we want that to be a little higher. So can we go, say, $50 below the share price and make money out of this? So we would want to go to about 420. And then when the market opens, I'll probably set up a similar trade, but I'll do it $50 below the current share price, which will be then more at 450 because it's currently trading at about 500. But you can still get the kind of idea here, right? So at the moment, it's given you a 42% return, which is pretty crazy, with a 74% probability. That'd be an insane setup. The numbers will change slightly when the markets open, but that's definitely quite appealing. I'm not recommending this, not financial advice, just trying to illustrate here what you can do. If you want to put on a trade like this, you need to understand what your trading protocol is, what your entry strategy is, what your exit strategy is, for a profit, for a loss, how you can adjust it. You need to understand that stuff. So, come and ask me about it if you want to learn. We could also do a really short-term trade until next week. Again, $50 roughly below the share price, still trades 24% in a week, which is pretty sweet, right? 24% in a week is pretty crazy. So early in the market, I think volatility is still going to be really high. So I might be looking at something like this when the market opens. And of course, I let you guys know if you're in my investing community, because I share all of my trades with you guys because we're transparent. I genuinely believe in that. So what does it mean for the market overall? So I'm pulling up a chart here for you just to really, really illustrate how crucial Nvidia earnings are for the market and for this bull run that we are in. So what we've got here is in, just color code this. So in orange, you've got the QQQ, the NASDAQ, and then in green and red, you've got Nvidia. Surprise, surprise. We're on an Nvidia video, aren't we? I thought we were. So the purple lines are earnings. So each of these purple lines here are earnings events. Okay, so the last 3 quarters I put in here, and then today's is, this one here. So what you can see is that on the last earnings, Nvidia jumped up massively. And it pulled the QQQ with it. Why? Because Microsoft moves with it, Adobe moves with it, Google moves with it a little bit more slowly, but it does. Tesla moves with it. Everything that has sort of an AI feel to it moves with it. Whereas on the earnings previously, they were initially a little bit of a jump up, not as big, but then we still pulled up. And on the November earnings, we actually went down a little bit because the stock price of Nvidia went down. So Nvidia, in many sense, is the new Apple, which leads the market. It leads the NASDAQ to some extent. It leads the S&P 500. So the fact that we're getting this jump up today you want to get watched at the end of the day and see that we're holding this ideally above 500, in which case this rally continues. And I don't think Papa Powell on Friday will be able to do very much about it. You can see here, I'm literally working on a laptop, so you can see everything here together. I want to encourage you to come and learn with us, celebrate with us, party with us, be one of the million people who genuinely gets to financial freedom, which in my book means living off your investments and your trading income. Let me help you with that. And go to felixfriends.org/stocks. Get your hands on our core program for literally 1% of its ticket price. felixfriends.org/stocks. I appreciate you watching. Thank you so much for tuning in. Smash the subscribe button. I'll keep you up to date with Nvidia and all the major stocks and events out there. We'll, of course, be covering the Jackson Hole scenario on Friday. And if you enjoyed this video, I made another video for you, which helps you to avoid the biggest, most common pitfalls of investors, the top 9 disasters that most investors step into. So check it out. I put the link here on the screen for you. Thanks for watching.